And that Treasury refunding announcement out just now, keeping its TIPS auction unchanged, but they are studying a new 5-year sale. They are lifting auction sizes of all nominal coupon debt as well as floating rate notes, and they plan to introduce a 2-month bill later in 2018. Want to get more details on this here? Let's bring in Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, Mike McKee, Bloomberg's International Economics and Policy Correspondent from D.C., and John Biner of Goldman Sachs Asset Management. Hey, Mike, can you give us some more details here of what we just learned?
Well, the Treasury is doing pretty much what traders had anticipated, raising the auction sizes for most tenors by $1 billion. The 3-year gets the most attention, though. They're going up to $31 billion in 3-year notes versus $26 billion last quarter. It's interesting. We'll hear from John and Ira, I'm sure, about the impact of really going short as they ramp up their borrowing to meet the budget deficit, because, of course, when we start to get less revenue a couple of years from now, if the economy slows down, is about the time these bills and notes would be expiring. But overall, pretty much, I would say, as expected. We'll see what they want to do with the 2-month bill. Their cash balance has risen significantly since it was drained because of the debt ceiling crisis. So I guess with the debt that they're incurring, they want to have enough cash on hand.
Ira, your thoughts?
Yeah, so I think there's two things. Obviously, the much bigger 3-year note is an interesting development here. I think one of the things that they probably looked at is how good demand has been in that particular sector during the note auction. So the fact that they're increasing that, I think, is just a sign that they think that demand will keep up with this amount of supply. The second thing is on the 2-month bill. I think the 2-month bill is important, and we actually started talking about this a few years ago because with money market reform that went into effect 2 years ago, it's hard for money market funds now to buy 6-month bills or 1-year bills. 2-month bills fit everything that they need because it has the right maturity. It fits all of the regulatory requirements for money market mutual funds. So I think that they think that there's going to be a nice demand. I suspect that there'll be a little bit more takeaway from things like 3-month and 6-month bills, and then and that'll be replaced with 2-month bills.